You're listening to the WenMoonPodcast,
sponsored by Alpha Dow.
Join us every week to listen to up-to-date news on the markets, macro, and the best degenerate stories you can't find anywhere else. Nothing on this show should be taken as financial advice. The opinions spoken here from the hosts and guests are our own personal opinions and should not be taken as financial advice. Now, let's get to the hosts, Clay and Taryn, and get this party started.
Welcome, everybody, to the WenMoonPodcast. I finally have my co-host, Taryn, back. I was about to send a fucking search party for him. I haven't seen him in a few months. So
it's been a while, man.
Anyways, glad to have him back. Probably one of my more favorite guests that we're going to have on today, Mr. Bryan Pellegrino. He is also known as Primordial AA on Twitter, and he is one of the founders of Layer Zero, which to me is a game changer. So we're going to be talking a lot about that today. What's up, Bryan? Where you at today?
Hey guys. Yeah, thanks for having me on. I'm in Vancouver right now, so up in Canada.
Yeah, nice. I obviously talked to a bunch of my buddies, said that we were going to be interviewing you. They were really, really excited. Everybody likes Layer Zero, especially after all the bridges, the hacks, and everything that's happened with the wormhole stuff. So we're going to definitely talk about that. But I was kind of curious myself, what was kind of your education? You know, you were an ex-poker player. Where'd you go to school at? And I was curious, why do you think some of the bigger whales today are kind of like ex-poker guys? You got guys like JMO and people like that. Is it kind of from like maybe the gambling, the risk, the risk taking, or I was kind of curious your thoughts on that.
Yeah, sure. So, my own background is largely self-taught for a bunch of things. I went to school for computer science. I did it for 3 years, dropped out after 3 years, and played poker professionally for 8. Did like 80 countries during that time, just kind of played poker all over the world. Online poker gets banned in the US, started a company in the States, sold it 2 years later, didn't really know what to do. So I just started writing some machine learning models for fun, all the DFS stuff. That was a company I just sold, was a daily fantasy sports site, but mathematical models around sports seemed interesting. So was building these in my spare time, showed it to this like group of MIT PhDs. And they were like, oh, we have somebody you have to talk to. And I was like, okay, sure, it sounds great. And the person on the other end of that phone call was Billy Beane. So like the founder of Moneyball and the GM of the Oakland A's. So I ended up doing a bunch of work and selling those models to a bunch of the pro baseball teams. After that, I ended up getting connected with a mutual friend of Tehran, actually, is Daniel Chen. So first engineer out of Andreessen Horowitz. 2 of us co-founded a company with 2 others actually in the Valley. That company got acquired a couple of years later. Did some academic like AI research for a year that got picked up and published by Noam Brown, Facebook AI research. Later got cited by DeepMind, which was like pretty awesome as a college dropout. And then here doing this. I've been in the space since 2013. Basically full-time since 2016. As to the poker question, I do think it's like pretty interesting. Definitely some skills are transferable. Like at the highest levels of poker, I think a lot of that is transferable. But I think one of the earliest reasons is just like online poker got banned in the States in 2011. And as soon as it got banned, nobody could play on any of the big poker sites anymore. So PokerStars, Full Tilt, all excluded to any Americans. And then on top of that, the other side is that all of the payment processors were banned. So Skrill, NetTeller, Moneybookers, PayPal, all no longer worked. So all of the shady sites that remained started using Bitcoin as a way to deposit to the site. So they adopted it super early, like literally anybody in poker, let's say June, 2 months after April 2011, like June 2011, knew about Bitcoin. I found out about Bitcoin actually a little bit earlier than that, like 2010, but I didn't really touch it until 2013. But I think so like just a large swath of the poker community was exposed to it, was super early on. A bunch of people would use it to deposit. And it was just easier than finding P2P deals all the time to deposit, to just like keep it in Bitcoin and like, okay, withdraw from this site, go to that site. And so people just started keeping larger and larger spots and I don't know, diving deeper down the rabbit hole.
Yeah, that's actually how I got my intro to Bitcoin was, I was living in Vegas. I was a poker dealer, moved out there when I was 21, 2013, same year, actually. I was playing like some online app, but you had to fund it with Bitcoin, didn't know what it was. Fortunately for me, I was a terrible player. So I went broke a bunch of times. So then I got kind of curious, like, what is this Bitcoin thing? And I was already kind of libertarian mindset at that time. So I kind of just dove straight down the rabbit hole. I was living out in Thailand. So yeah, I knew JMO and those guys like way back. And they were already like all in. So Yeah, I guess that does make sense. That's some good points. Your intro to crypto, you mentioned I met you through some Telegram groups, actually, like 2017-ish. We used to discuss ICOs and everything like that. So I'm curious, like, when did you actually start, like, not just trading to make money, but when did you start getting that mindset of like, I see some problems, I want to build some things? Because you definitely seem like you are a builder. You're already building the models back in the day and things like that. So when did you shift from like, I'm making money trading to, no, I want to actually build some things. I see some problems.
I think it was really like 2019 onwards. So again, 2013 was like a lot of hardware stuff. It was, I was running rigs of Bitcoin miners and mining all this crazy stuff in my garage, and my brother-in-law's garage, actually. And, around the Ethereum ICO time and like everything that was happening then. 2017 was definitely just like, end of 2016, I got pretty high conviction around Bitcoin, put like a large chunk of my net worth into it, and just like was swept away by everything that happened in like 2016 to 2018. And then 2019, when Ethereum like really started doing more, that was when I got really interested, specifically around actually the first couple of on-chain dexes. So I remember we had this hedge fund reach out to us and ask us to write some scripts for them around just trading around some of the earliest dexes. And then after we had done that and we had just like toyed with building that, then it became like obvious that it was both super fun and something we could be really, really good at. And so then, we did everything from, so we were starting to build small bots. We were doing like ARB and Triangle ARB before like MEV stuff really existed, or in like a broad scale. And then you would see like, then the miners started colluding against us, and we're like, oh, this is like rigged and we like can't win here anymore. And then like, obviously flash bots came in and like commoditized this entire process. And then we got into like building like real systems. But that was the earliest, like, most things, right, in technology. You just like get interested and you start building like toy models, toy systems, start playing with it, and then go from there.
Yeah, you probably saw that crypto was very, I guess, fragmented, because Layer Zero does solve a fragmentation problem. A very blockchains individually, they're big silos. They don't talk to each other. They lack communication between each other. They don't understand each other's states and transition between states. So what initially, when you did come up with the idea for Layer Zero, were you still at Open Token? Had you already sold that company? And then what were you doing? When did the, idea click? Or was it you working with your boys and your other co-founders? How was it?
Yep. Yeah. So I'd already left Open Token, was working with Bryan and Caleb, again, just building on-chain systems, just like playing around. And it was really, the catalyst was BNB chain, BSC at the time launched. And all of a sudden, just like every day, I'm getting spammed with messages like BSC has more volume than Ethereum, has more users than Ethereum, like all this stuff that seemed like so foreign to me, because, I've been around since like the very earliest, like other chains were launching, and all this other stuff. And just like, they were there, but like nothing ever happened on them. So the concept of like this cheap chain, regardless of the trade-offs, just like actually having more volume and users than Ethereum was just like seemed insane. So we just started messing around. Like we just built out a game to go between the two chains. And then after we built it, was a dumb game that we're just building for ourselves, of just like, you play the game here, you basically do something in the game where you win enough times, you get an NFT, and the NFT is like minted on Ethereum. That's it. The whole concept, basically. But then we realized a very simple process of just doing something like that required you to have just like central coordinator that sits outside and just like triggers events on both chains. And it was fully trusted. And we're like, well, that sucks. But like bridges exist. So surely somebody solved this. And then we went, and at the time it was only like Polygon, a couple other bridges. And we looked at the state of bridges, and we're just like, there's no way. The one, they weren't like generalized. You couldn't do what we wanted to do. But two, there was just like no way we would trust a significant amount of money to any of the existing bridges at the time, like any of them. And so we actually first started like the precursor to Stargate, and we're building like this structure of a better bridge. We're very confident on like the concept of instant guaranteed finality on like all bridging being like application driven. And then in building that, we're like, oh, we literally are still reinventing like the transport layer for this thing to even exist. And so like that is clearly the generalizable problem. And that's like what became Layer Zero. And we really started formalizing that.
I definitely want to go back just a tad. Some of the people that are probably listening, a little bit newer to crypto, things like that. Can you kind of break it down, even though we were just kind of talking about it though? Like what exactly is Layer Zero? What does it do? We know like most people know Bitcoin, Ethereum, these are layer ones, but what does layer zero do? And I had a couple of my buddies and they're like, what do you mean that their networks are talking to each other and sending messages and things like that? So you don't mind just kind of breaking it down a little, maybe for some more novice, crypto people.
Yeah, 100%. So you got a bunch of chains, you have applications that live on all of them, these contracts, smart contracts that do things, but there's no way for those contracts to communicate. So what layer zero does at its core is contract to contract communication. Now, the way that I frame that in my own mental model is early days of the internet, you had all of these small infranets, you had Stanford Computing Cluster, all these different computing clusters around, but none of them could actually talk to each other. And then we started to develop like these standards and technology to basically enable these computers to talk to each other at scale. And so like when you have a packet on the internet, what in a packet is like the base information that gets sent across the internet. Really all you have is like computer A, some computer that lives here, some piece of information, and a computer over here ingests it. So you have like compute, information, compute. Layer zero at the contract level for chains is just contract. So compute, information, compute. So it's arbitrary contract invocation with a bytes array. And just like a packet on the internet, like that base primitive is so small. And the first things people did with it was so dumb. Like, you know what I mean? There was like you really started doing like things that you would just be like, all right, this is like totally toy systems, like never going to be at scale, didn't matter. But then today, because of a packet, like we are here talking, we have streaming video, you have Netflix, you have like all of these things that you have. So like the point is like build the simplest base primitive that can enable all of this technology to be built on top of it. So layer zero is just sending a message from one chain to another. That can be when you bridge a token across, it can be making a trade, it can be like moving an NFT from Solana to Ethereum or whatever that might look like. All of that are just contracts talking to each other.
Just from a user perspective and from a developer perspective, how do developers actually use Layer Zero? What sort of applications have you seen built on top of Layer Zero so far? And new developers looking to approach, building on Layer Zero, what sort of documentation is available to them to learn more?
Yep. Yeah. So devs basically like the goal on our end is basically make it as easy as humanly possible. So if you really dive into it, there's all the depth of like levers of control and security, all these different things you can do. But at its core, all that you do as a developer is you have two contracts, one on each chain. On chain A, you have send, and you just send an arbitrary bytes array. And on chain B, you have receive, and you just interpret those bytes. And that's it. You're just sending a contract call and doing something. It could be like burn here and mint there. What you're going to do is burn. You're going to take a receipt, some payload that says, hey, I burned 100 tokens from this address, send it over to the other chain, and they're going to know that it's come from the right contract and that the message is valid and everything. And then you're just going to say, okay, receive this. I will mint you 100 tokens over here, right? So what people have built at this point, there's, 20,000 something contracts on testnet, 2,500 on mainnet. We're just about to cross 2 million messages. So people have built all kinds of things, tons of games, tons of NFT stuff, large dexes, Sushi Swap, Pancake Swap have all integrated on top of it. The Cake token for Pancake Swap is now an OFT. BTCB from Avalanche is now an OFT. People are building money markets, really like literally everything. And then of course, like Stargate and all the bridges and everything else around that. So people have had like topically, people have really started to hit like every vertical, but I don't think people have fully grasped like the depth, right? When you start to build something, you kind of take existing systems and you retrofit them. And then as people start to really build things fresh from the ground up, the dynamics of like what can be done is going to change a lot. And that will be super interesting.
It's something I have dove really deep on. There's a Cambridge team called Interface. They are a Cambridge University team. They are building sort of a cross-chain DEX. And they speak very highly of the team. They receive a lot of support from Layer Zero, a lot of developer support, which is excellent. So just based on your response to that, there is a big problem in the whole ecosystem, right? Where it's very siloed from the rest of the tech industry, rest of the finance industry, in the sense that first of all, it is quite earlier on, but also it's not frictionless. There is a huge barrier to entry in terms of usability. There's a huge barrier of entry in terms of knowledge. There's also a huge barrier of entry into integrating this ecosystem of blockchain protocols into more conventional industries, more conventional systems, whether it be within the tech industry, within other social media, the social media industry, there's the cloud technology sector. There's so many different sectors. And how do you envision that changing in the bear market right now and going forward?
Well, one of the things we focused on early was that like I guess a couple of our theses was that everything was going to be application driven, not user driven. So like my easy example was bridges, right? You had this bridge that your user would go and they'd move their money across, kind of like a bag of money from chain A to chain B. And then the DEXs who owned the user at the interface level, they didn't want your user to like do a swap here, leave, find a bridge, go across this third party bridge, and then like hopefully make it back to their DEX. They want to own the whole flow. So they're going to have that movement component directly in the app. And then you go a layer above that to like wallets, so the user interface, that level of abstraction. And the wallet doesn't even want you to go to the DEX. Like MetaMask is making $400 million on the swap function alone in the MetaMask wallet, right? So there's just these layers of abstraction up to be able to build like a real consumer app. So one of the important things for us was this concept of like gas abstraction. Like how do you get end consumer? How do you make like the Robin Hood of crypto? How do you make it so people can do all of these things, but not necessarily need to know about like the underlying chain, the underlying gas that's being used? And so like we've spent a ton of time into that tooling. But in terms of like actually like, if you look at the landscape of conversations we've been seeing and having, like every major Web2 company in the world, all of the largest TradFi financial institutions, and the super majority of like consumer fintech apps, like everybody is exploring doing something in the space right now. And there's just no way that their market bears the current user experience. So there will be like an impasse very soon of like making this thing consumer usable or not. But there are resources from all sides, again, to like the very largest central banks and investment banks in the world to all of the consumer fintech apps that and use regularly.
Yeah, I actually wanted to circle kind of back around. We were just talking a second about the bridges. So obviously before Layer 0 came around, we were using bridges. We had some hacks. We had some things like that happen. A lot of trust has been lost for sure. Without, I guess, kind of shitting on some other competition or something like that, of course. Can you tell us why, the Layer 0 technology, I guess, is better than using a bridge or safer than using a bridge? I guess because the bridges kind of have those like single points of failure, I guess. But if you can kind of explain, why this was made, why it's going to change everything, be much safer and things like that, than the bridge, the wormhole or whatever, I'd love to hear it actually.
Yeah. So I'll try to keep it reasonably high level. And there's a couple different touch points. One, like when we started, everybody only spoke about bridging. Like bridging was the only use case of doing anything cross-chain. And we kind of came and had this thesis that like bridging itself is just a special case of generic messaging, right? Like, yes, you're moving money, but like you could be moving anything. It's just a piece of information. And so like most bridges are also like a messaging protocol, but they were just fixed to only doing one type of message. And so when you develop things, there's just like almost all the bridge hacks have happened due to a couple of problems. One, like a narrow set of keys. So you have like, this is a Ronin hack, this is a Harmony hack, etc. It's just like you have a small set of keys that control all the value of the bridge, and they get hacked some way. Somebody steals all the company's backpacks, or somebody gets in your computers or your AWS, or whatever this is, and the keys gets compromised, and then they basically exploit this out. Then you have just like bad code. So this is like Poly Network had just like a bug in the smart contracts. Wormhole had a configuration issue at some point. Nomad had upgradable contracts, and they pushed bad code. And so like there's all these different surfaces in this entire system. And so like I think it really matters in how you build systems, because like security as a whole, how do you measure something is secure? It doesn't matter if it's like a DEX smart contract on Ethereum, or it's a bridge, or it's anything, right? It's really like the most practical way to do this is how long has it existed and like how much value has it secured, right? The more value it's secured, the more eyes are on it, the more black hats are out there trying to attack it, and how battle tested is that? And so one of the big problems is basically every bridge right now has upgradable contracts and is building with upgradable contracts. And so you can have something that's existed for 8 months or a year, and you're like, okay, this seems like pretty safe. But then they can just push a piece of code and all of the security properties are changed. Now it's like you've reset that timer back to 0. And now like nobody has any clue on like the state of security around this thing. And so like a lot of it is business practice and like operational practices for how they get built. Yeah, go ahead.
I guess with editable smart contracts, it also comes down to if there is huge security risks, the founding team of that protocol actually needs to step in order to fix it. I guess that's the justification for that, right? Because these bridges are securing, in some cases, like Wormhole at one point secured tens of billions in value for Solana. And the founding team, I mean, Jump has a very strong thesis on bridges versus Layer 0 versus messaging protocol. And the whole industry knows their stance. And there was a huge hack in Wormhole. And I mean, I hope Jump increased their security budget for the bridge itself since.
I don't know if you saw, but after that hack, there were 2 other times where they would have lost 100% of TVL on the bridge. They were found by white hacks. So they had to pay out like a $10 million bug bounty, and then the same issue happened again. So there were like 2 other issues after that. But yeah, I mean, there's having this surface of upgradable contracts. What you're saying is trust us as a team. And like, if something bad happens, we'll step in. And like, that's nice in practice, but it's really scary. And there's like a reason. If you look at Ethereum and like the ethos, like, would it be easier for Uniswap to not need to migrate like billions to tens of billions of dollars of liquidity from like Uniswap V1 to V2 and V2 to V3? Of course it would, but you lose all of the guarantees that make the protocol like decentralized and permissionless and like have these constructs that make Uniswap what it is. And so like when we were building Layer 0, there were like 2 main tenets that we cared about more than anything else. And the first tenet is that like we're building a protocol, not a service. We're not a messaging, like we're not a service. You're not opting into us. We're not a service provider. Like you don't need to trust us. You don't need to care about us. If our whole team disappears from the face of the earth today and never ever shows up again, you never hear from us, Layer 0, the protocol, will exist from now until the end of time. Anybody can run it. Anybody can step in and manage that. You have no reliance on us. It's not like you can get mandated to be shut down. It's not like we can be malicious and stop things. That protocol exists in perpetuity in the same way that Ethereum or Bitcoin or anything else exists. The second is that if an application wants a lever to have control over their own security, there is nothing that we can do. So it doesn't matter if we are 100% malicious and my only intention is to harm the protocol and try to steal from them or hurt them. If any application wants to point to a specific validation library, run one of the Oracle or Relayer themselves, do any of these things, there's nothing I can ever do to impact them. And so like, I think like those 2 tenets, if there's like, we don't need to dive into anything else more technical than that, nothing, like those 2 things make up Layer 0. Like that is the core of the belief of everything. Just
for the audience here, I did receive a lot of technical questions from my engineering friends.
We can definitely dive into more technical, but I'm saying if the audience isn't
maybe in a second
that
podcast,
should give you everything you need to know. Yeah.
I was curious actually. I had a couple of people ask me, how exactly does like Layer 0 make money? Like obviously you guys built this thing. How does it make money, especially when you say something like, I can leave forever. Other people can do this. Other people can build. How do you guys make money after it's created, it's out there? How does this work?
Yep. So Layer 0, you have to separate. There's like 3 things, right? Of the Layer 0 Labs team has done. There's Layer 0, the protocol. There's Stargate, the protocol, and there's Layer 0 Labs, the equity entity, right? Layer 0, the protocol, is like a piece of technology that exists and is out in the world. Stargate, the protocol, is a protocol that lives on top of Layer 0 that does what it does, is governed by the DAO. Layer 0 Labs is an equity entity whose job is ultimately to, at some point, make money, but really expand the reach of the Layer 0 protocol, provide technology support, do all of that, right? So Layer 0 Labs basically is a participant in the Layer 0 protocol. Right now, what that means is we run a relayer within Layer 0. Anybody can run a relayer. Nobody needs to use the Layer 0 Labs relayer. You can run your own. You can use anybody else's relayer. So already open and permissionless. But Layer 0 Labs runs a relayer within the network and basically provides service. So we built pre-crime. We built a bunch of different things that basically make life easier, and people can basically pay for that. So this could be like, you look at something like Ethereum, right? You have like Ethereum, you have Ethereum, the protocol, you have the Ethereum Foundation, and then you have like Consensus. And Consensus builds things that are, used very broadly, right? MetaMask and Etherscan and Infura and all of these things. But their end goal is to make money. They service the Ethereum ecosystem, and a lot of what they do is actually critical to the Ethereum ecosystem's success, but they make money as a whole, as like an entity, right? So that is Layer Zero Labs. Its job, it is an equity entity. It is meant to make money at some point, but Layer Zero, the protocol, owes Layer Zero Labs nothing. Layer Zero Labs does not have special privileges. It does not make money directly from the protocol. It is a service provider and builds things within that ecosystem. And that is the function of Layer Zero Labs.
Got it. I had one more follow-up. Once again, my buddies were really curious when I told them I was going to be interviewing you. Like I said, this was a really hype project. All the institutions were finally coming in and money was flying around everywhere. We heard, maybe you can correct me if I'm wrong. I'm not on wasn't a seed investor or anything, but we heard something like, Layer Zero had raised like 9 figures at like $1 billion valuation. So a couple of my buddies were asking me to ask you, so hopefully it's not too personal, but how does this work with like the funding that comes in? Where does like $1 billion valuation come from? And then, once all this money is escrowed in, let's just call it 100 million. I don't know what the number was, but, for simplicity, we'll say 100 million. How does it go to like, surely the founders need to get paid, the devs need to get paid, you need to have years of runway, you need marketing, things like that. So how is this kind of spread out, if you don't mind?
Well, I'll give this specific experience and then I'll give like general experience. So as someone who's been building companies for like almost, 17 years now or something, this is a very atypical experience this time. Layer Zero as an entity, we have never, ever, we don't even have a pitch deck. We've never had a pitch deck. We've never actually been actively fundraising. So we've always were building this thing that we thought was awesome. And then we would get preempted by people. And the preempt was always, we're going to, basically invest. We want to take the whole round. We don't want anyone else in. We ended up turning them into rounds. And so we had this like early friends and family round. Somebody found out that we were building something and they said, hey, I want to write a check. We let in a couple of like friends, family, people we thought were strategic. Then we had another round that was a first announced round that was co-led by Binance and Multicoin. It was Defiant, Sino, Robot Ventures, a really great, amazing cap table, very DeFi focused. And then was the round at $1 billion that was led by Andreessen Horowitz, Sequoia, FTX, and had PayPal and all of these other entities, Uniswap, all of these entities. And so that round, I guess that round is the one people are most interested in. So what actually happened that round? Again, we had raised 6.4 million in the prior round at $50 million valuation. We had no intention. We were just going to go through to launch. We're very focused on building, and we got a preempt. I guess I can say who it is. I'd probably say who it is at this point. But anyways, we got a preempt at $300 million who said we think what you're doing is amazing. We want to basically preempt anybody else. So if somebody is doing that because they think they want to beat the market to you. They know if you go to the open market, the price will likely be higher. And so they're coming to say hey, I want to give you this money now. Here's a term sheet. Let us invest. You don't need to go through raising another round. Here's some terms. And so they tried to preempt us at 300 million. And we said, hey, listen, we don't plan on raising again. If we do raise again, it'll probably be the last time we ever raise. And so we think if we do that, we'll do it at a higher valuation, but we're not asking you to pay more now. We love you guys. We're going to go get back to work. And we'll come back to you when we think we justify a higher valuation. So 500 million, whatever it is. We'll come back to you. Thank you so much. Then, cold DM out of nowhere. I'd never spoken to them before, and totally separate than this. Sequoia had reached out to me and just I love your Twitter. I'm interested in what you're doing. Let's meet. Talk to Sequoia on Friday. Talk to another Sequoia partner on Saturday.
Well, this Sean,
on Friday night, and then. Yeah, Sean. So it was Michelle
Sean
first.
Told me Michelle,
the story. Michelle Cole reached out, and then Sean on Friday night,
I know the
and then
story.
all of Sequoia on Saturday, and then somehow that Sequoia was interesting, leaked to the world, right? And so then we had 8 term sheets in 8 days that spread out. This was now we had term sheets from Sequoia and from Andreessen and everybody's basically making offers, right? Really amazing group of investors. We landed, we had flown to the Bahamas because FTX was we want to talk to you. We flew out to the Bahamas, landed in the Bahamas, Tiger was there waiting for us, and they're like, we have a term sheet for you before you even go and talk to FTX. So it was really like very atypical, very kind of crazy and chaotic. I had term sheets ranging from all the way from 300 million up to $1.5 billion. We turned down the valuation at $1.5 billion to go with the tri-lead at $1 billion. At the time, it was FTX, Sequoia, and Andreessen Horowitz. Obviously, like, at the time, like three of the best investors you could ever imagine. Yeah, like tier one, the best of the best, like basically never shared a cap table together. So we're focused on like, how do we build an amazing company? Like, and who do we want to be able to do that? And then you're asking like, okay, what actually happens to the money? So the money doesn't go to the founders. The founder can't just like take the money, right? The money goes into the company. So now the company has 140 something million. Everybody takes a salary and basically the money just sits there. So at that point, we had like 30 years of runway at the current burn. We ramped up the team from 7 people to a little over 30 people. I just sent out the investor memo for last year, actually earlier today. So I have like all the exact burn numbers. Last year, we burned $18.8 million total. So, basically that's all salaries, all legal, all expenses, all basically everything that you would have all together was like 18.8 million. We're at like 38 people now or something. So nobody gets to like, devs aren't getting like $5 million checks or anything. Devs have like a salary, they have equity in the company. And so they have like upside, they have intention, but that vests over 4 years or over even longer sometimes. And so like they need to be there for that whole time to realize that value. Everybody really needs to be like in it for that long term. So and any of the tokens, all that stuff is like this long vesting period. And so, yeah, I mean, that's basically how it's structured.
Now, I have a question about the secondary markets in crypto. Now, there were a lot of these rounds. This was an era of venture capital when the Federal Bureau interest rates was close to zero. There was an abundance in capital. There were very large, I mean, we know what happened everyone knows what happened with FTX, but that was a unique case. But a lot of things happened with a lot of large allocators. These guys, they raised venture funds in zero interest rate rounds, zero interest rate sort of macro environment. With the bear market, with very strict macro conditions, very high interest rates, no end in sight, these venture capital funds will not be able to raise. Most of them will not be able to raise. I heard, Paradigm shelved around. A lot of the tier one names, they are, reducing. Sequoia reduced management fees for their most recent round. There is a big problem in crypto where a large amount was allocated to companies at early stages, mid stages, late stages, like Layer Zero. And a lot of these, I guess, SAFTs, a lot of these positions are now hitting the secondary markets. How do you view the secondary markets? I mean, I know that Layer Zero equities are trading quite a bit in the secondary markets. How are you approaching these investors who are selling? I mean, it makes sense for early stage investors to realize these returns. To late stage investors, and obviously Layer Zero is a tier one name still in the digital asset secondary markets. Just want to hear your thoughts.
Yeah, I mean, in general, again, been around markets for like a very long time, large majority of my life at this point. At the end of the day, the markets are the markets, right? It's like nobody should try to control that. Public markets got totally crushed. You had what was seen as like tier one public markets totally destroyed. Then you have private markets that have like this illiquidity premium to them or discount rather, where like you don't have extra available liquidity on them. And so like, this is anybody who lived through 2017 and 2018 felt this in like a very visceral way. It went from like nothing to like tens or hundreds of millions of dollars to literally some of these projects that raised, I remember GEMS was like these 2 Wonder Kid founders from MIT. They raised like $600 million, like immediately pushed out a token and then like, nobody ever heard from anything again, right? You had like projects that raised tens or hundreds of millions of dollars. Yeah. Projects raised tens or hundreds of millions of dollars and never even came to market, right? Never launched anything ever. And right, that is the equivalent of like private equity, right? So yeah, I think there has been this huge forcing function around like what teams you're betting on, what are the valuations. Obviously, everybody was marking all of this stuff to public markets, and then public markets got marked down. And so it became like this very interesting dynamic overall. I think paper-wise, you've seen, I think most of the strongest things have maintained like pretty well. Like I've watched a lot of paper flow across from like a lot of different projects, and I've seen things take like 95% haircuts, and I've seen things take like actually trade at a premium as they get like closer and closer to liquidity from last round. And that's like even just things that raised in the last like 6 to 9 months, like when it was very firmly bear territory. Yep. Yeah. Exactly. For tokens. Yep.
Yeah, I was kind of curious for you, now that Layer Zero is built, what's kind of the end goal for you and Layer Zero? And then also, are you already looking at some new set of problems you're trying to solve, something new you're trying to build? Because to me, just from knowing you, I don't know you too well, but I've known you for a while, I guess, speaking a little bit here and there, back and forth on Telegram. It seems to me like you're the type of dude where doesn't matter if you have $5 or 5 billion. The money doesn't really matter to you. You really enjoy building, doing things like that. So I was kind of curious, like you seem like the type that you're going to be in this space for quite a while. So I was curious, you already have your sights on something else, some other problems, some kind of behind the scenes, new things you're building?
Yeah. So I think the other part of me is that like, it doesn't, some people don't know this side of me, but like I'm a hyper competitive person, have been my entire life and in basically everything. For me, like, I think part of building early on was like, I had this chip on my shoulder and I always felt like I could build something bigger than what I did. And like, I had some acquisitions, but they didn't make me feel satisfied. They didn't make me feel like I had really done the thing. Now, I had built this company that's had like tremendous success, and we have all these, employees and are growing and have had like every metric is going in the right direction. But like for me, like you have to win, and you have to win like convincingly. And so like for me, there's like still this very long period of like, what does winning actually look like? Like for me, the next period is like, how do you get Layer Zero to be just like completely ubiquitous? Like that is the end state that you want is all of these things, the Robin Hoods of crypto, the Web 2 stuff, all of these, everybody is like using it as underlying layer. End consumer has no clue what Layer Zero is. They've never heard of me or thought of us. Like they've never thought about TCP IP, but it's used in every single message that gets sent, right? And so like the gap from here to there is still like a massive chasm. So there's a huge amount to be built in terms of just like tooling and refining the protocol and like how validation libraries get processed, bringing down costs overall, like everything universally. So no, it's still like, this is still the most fascinating problem to me. I think this is the thing I go to bed thinking about and like wake up in the morning thinking about, some of that being like competitive forces and how do you win, and like winning, like getting people to build on you. And some of it is like the technology, like how do you solve this really hard problem to like make these products usable at scale and like cost efficient. So still here for the foreseeable future.
I agree with you, man. I think the team that sort of puts crypto in the back end and builds a product that allows any sort of layperson, someone like my mom, to use every single application that has been built on top of crypto through, I guess, one simple, easy to use interface or multiple interfaces, build easy to use consumer applications that allow users to access a host of products without knowing any of the details. Users don't really need to know what bridges are. Like users need to trust that once they, transfer over tokens from one, not even network, from one application, Ethereum, I guess they can, my mom would treat Ethereum like an application. From Google Play Store to Apple iTunes Store, or Apple Store, whatever. That team will definitely win. Definitely. And I think there is a lot of teams, including the Cambridge team. I think what they're building on top of Layer Zero is quite substantial.
Yeah. I actually want to, if you don't mind, I want to kind of move away from like, I guess, the technical type of stuff. I always enjoyed kind of hearing your thoughts in some of our Telegram groups and your Twitter and things like that. I consider you a very, very sharp guy in this space. I guess life in general, but definitely in this space. But I was kind of curious, like, what are you, we're in the bear market now. It's kind of boring. Obviously, if you're not a builder or something, if you're just a guy who trades, it's really boring. What are you kind of bullish and bearish on coming up? Not asking for like a specific coin or something like that, but just, what sectors are you bullish on? What do you think's going to kind of, fade away? Kind of curious to hear your thoughts.
I think there's like intellectual curiosity and there's like trading curiosity, right? Intellectual curiosity, I think Celestia, data availability, like that entire concept and like structure is super interesting, and just like how things are moving and like what is actually the minimum viable blockchain and how does that expand. I think a bunch of the zero knowledge stuff is super interesting, although in a massively contrarian stance, not at all for messaging or bridging. I think it's a total scam, but we can save that for another entire podcast. So like, but in terms of like roll-ups and atomic setting, like I think a lot of the ZK stuff is really, really fascinating. I think like last cycle's structure of just like food tokens and like that kind of stuff. Like I think DeFi has to evolve and has started to evolve. I think there's still a ton, like gaming stuff is super, super, super nascent. And I think people just like don't know what they want to do. Like everybody's like, okay, I guess I need an app specific chain. And like, but what does that actually mean? And what does experience look like? So I don't know. For me, like from the, and I'm still like, I just love this space. I play with literally everything. Anybody who's ever looked at my wallet sees it full of dead NFTs and like playing with every DeFi protocol. I just like touching and playing with things. So like I try to play with every new thing that comes out. Like that has always been the best to me, right? Like you just mess around with something, and after you played with enough things, you're like, oh, this actually is like super cool, or like, what's the point of this, right? And I think like that becomes like more and more apparent. And sometimes you have big misses, but I think like I don't know, you play as somebody who's been around NFTs for a long time, like you play with SudoSwap and you're like, oh, actually, like, of course, this structure like should exist. Like this just makes, an NFTX and a bunch of things like tried to do that earlier, but like, how do you just have like simple liquidity structures for this thing that doesn't have that? You play with like, a bunch of this like newer mechanics. Uni V3, I think it like bent a lot of people's minds, my own included, of just like,
me too.
How do you actually use this in like a structured way? But I think there's like, you can just like see the sort of like step up in terms of like how this is used and how people interact with it. And so I think that really is like the best thing. I think GMX is a great example of that too, of people just like being like, oh, like derivatives on chain now are actually like reasonably easy and people love them. Like volume is picking up. Like that's something that people found early and we're just like used it. And we're like, you know what, this is actually pretty great. And like, now I don't need to go to FTX. I don't need to go to wherever. And so, I still think in bear market, like you might not actually be making any trades, but like just go mess around even for small amounts of money with everything. And you'll just see things that are like, I don't know, just make sense.
Yeah, for sure. I actually did have, I guess, a kind of protocol type question. So I actually got invited. I'm super excited about this. Actually, it's going to be my first time to Dubai in a week and a half, but I got the invite to Satoshi's Roundtable. So I'm super excited about that. One thing I wanted to bring up to these kind of religious Bitcoiners, even though I consider myself a Bitcoiner, I'm still in love with it, even to this day. It's a very important thing to me. I actually did a podcast like 2 months ago with Jordy Alexander, and I consider him very, very sharp. And one thing we talked about was Bitcoin's security budget after a couple halvings from now, because I guess Satoshi envisioned that people are going to be using Bitcoin like every day, like money and things like that. But the problem we're seeing now is that nobody wants to sell it. Nobody wants to use it. People make fun of you if you sell it, if you use it for something. So it seems to be a big problem that's coming. Jordy's even thinking something like the 21 million thing might have to change a little. We might have to have like tail emissions or something like that. Is that anything that you've kind of thought about or have any thoughts on or anything like that? Because it seems to me that there is a problem coming, and a lot of these kind of diehard OG Bitcoiners, like, they kind of have their head in the sand and they just don't want to address it, or they don't want to acknowledge it. But it seems to be a real problem coming.
Yeah. I mean, separately, I will also be in Dubai at the same time as the Satoshi Roundtable. So maybe we'll connect out there. But awesome.
Yeah, let's catch up and have a drink or something.
Yeah.
That'd be nice.
I think like one, it's a little bit early. We've got like 100 more years to figure it out, right? So it's like there is this like reasonably long period until this actually needs to be solved. And like, it was only 5 years ago that we're arguing about like big blocks for small blocks and like trying to blow everything up. So like, I do think there is plenty of time. The real question is like, I think there's like very interesting, like some decisions have been made. The whole point is if you can sell the Bitcoin block space, like the security around the Bitcoin block space for enough money, then everything is fine, right? But you need this like constant demand. And right now the structure is simply moving Bitcoin. And so like, will we see adoption of Bitcoin as currency? Will that actually happen? Like, probably not, but who knows? But like, there's a world where through Lightning, through whatever structure this is, like there's a world where Tether actually had been utilizing like Bitcoin block space, right? And that like Tether movement was in some side chain that was ultimately rolling up and paying Bitcoin for security, and that like dollars, the movement of dollars was like this thing that was tapping into Bitcoin security. And like in a world where like Ethereum doesn't get the traction that it is, then that likely happens. And now this like problem is largely resolved, right? And so like there's a lot of things that could happen that like really the question is just like, is there a way to monetize the security of the Bitcoin network, and like who will pay for that? What will pay for that, and how does it make more sense than paying for Ethereum? And so like there are a lot of things I think that can be explored that can like change that structure and like the overall structure. And I do think people are experimenting. I do think Bitcoiners right now, like, and again, I came from like diehard Bitcoin maxi. Like I think things move slow, and I think it's like, maybe it's a feature, not a bug. Like it just doesn't break. Bitcoin is great. It's been there. It still works. It's always been there. Like maybe it is a big problem, but I do think there's just like such a long time to solve the problem. You know, if you're purely worried about like Bitcoin security only, I think there's plenty of ways to solve it. Now, if you're worried about like Bitcoin being like Pareto dominated by like Ethereum and just like terms of overall usability and other things, and I will get torched by Bitcoiners for even suggesting that is a possible outcome. But like that could be a real concern, like an existential concern. Just like basically everything you can do there, you can do here. And so like where does the monetization for block space come? But if you look at Bitcoin as like this isolated thing, I'm not worried about the security model for like a very long time.
Okay. Yeah. Makes a lot of sense too. Yeah. It's something I've just been kind of thinking about. And, you know, with every 4 years, less and less coming on the market, it seems like that was kind of the big issue, you know, coming up. So kind of wrapping it up in a little bit. But one thing that I always ask any guest I have on, because a lot of people that I have on here, they're very successful. They've made it. A lot of people that watch the podcast, they're just trying to get some alpha and things like that. You know, a lot of the guys listening, they haven't really made it yet. They're trying to, crypto's their life. Do you have any advice on like guys who are trying to make it in crypto? They haven't really made that life-changing money yet, but maybe they got, you know, low six figures or something like that. How do they kind of manage that money through a bull market? And then the big thing is, how do they not lose it in a bear market, you know, trying to chase or things like that? Or maybe they didn't get out at the top and, you know, they've drawn down 40%, and we see a lot of guys trying to use high leverage to make it all back, and, you know, they go broke and stuff like that. Do you have any advice on guys like trying to make it? They're kind of close, you know, to that kind of life-changing money, but they just haven't got there yet.
I think it really depends on what you're trying to optimize for. Like, I think that's ultimately what it comes down for. For me, when I was young, my goal was like, I don't care how much risk I take on. Like, I want to retire before the age of 30. Like, that was my goal then. And so like, for me, it was like, and this is, you know, this factored into when I dropped out of school to play poker professionally, like all of these things. It was always just like, what is the worst that can happen? Like, the worst that can happen is like, I moved to Europe, I play poker, like, I'm bad, it sucks. And like, I just go back to school. I've lost like 6 months of my life. It's like not that bad, right? And for like everything else, it was just like, what's the worst that can happen? Like, I go broke, like I'll go live with my parents. Like, I love my parents. My wife doesn't care. She loves my parents, right? And so like, I would just, any chance I had, I would be like, I don't care about salary. I didn't take $1 of salary ever until this company now. Everything that I ever did in my entire life, I did for equity, always. And so it was always just like, I want max equity. I want max upside. All that I care about is optimizing for that like asymmetry in the positive outcome. Like, I want to capture that. That was the thing that I care about. And like, if you're going for that, then I think that all you care about is just like learning. Like I blew up a bunch of stuff in 2014. I blew up a phenomenal amount of money in 2017. Like it sucked. Like it deeply, deeply, deeply sucked. But I like learned all of the things that I needed to learn. And every single time has just been like so much easier and so much better at like managing these things. And it's like way better to learn it when you're 25 than when you're 45 and you just like don't have the will to just like do it again. Now, if that is not your goal, right? If your goal is not, I don't know, 100 million and your goal is like 1 million, that's totally different, right? Your risk profile changes. You don't need like this massively right tail outcome of like crazy asymmetry. What you need is like to mitigate downside, because like when you have, like you said, low six figures, you have 300K, like you're already at 1 million in like not that many years by just like normal things, right? But I think the biggest thing that, okay, I guess to condense it, I think the biggest mistake, so everything I've learned, I think the biggest mistake that people have is they just do things without conviction. And so like, it is so easy to follow somebody else's advice. And like, this coin seems awesome. Bitcoin seems like a great long here, whatever. It doesn't matter what it is. And you get in a situation where like you do that thing and then it draws down 40%. And then you have literally no idea what to do. And like, do you sell? Do you not sell? What do you do? And then like when you sell, like you haven't learned anything. All you learned is like that guy sucks. And like maybe he doesn't even suck. Like, maybe he was like factored in. He cut it earlier, like whatever. But like the point is like, it doesn't matter what it is. It's okay to make mistakes. Like it's okay to be wrong, but like don't care about what anybody else thinks. Like actually have conviction on something. And then on the outcome, whether you win or lose, like you will have learned something. And like that is the way that you grow in all things. Like it is so easy to want to just follow somebody else or just do this thing because the allure of like, oh, this magical person is like just going to lead me to financial freedom is so tempting. And it's like in everybody just like want to follow that. But like, if you actually want to learn and like grow at doing anything, like you have to be able to build your own conviction because you have to basically, and this is the same when building companies, right? Like I talk about this all the time. Like you have to deeply, deeply, deeply have conviction in the thing that you're doing because it will like suck. It will be miserable. You'll have no money. You won't be able to raise. You'll be like worried about like you're clearly broke in a couple months if you like can't put these things together or like solve this problem. And like there are a million times for you to quit along the way until you actually have that success. And this has happened with like, take every big company who's ever happened. I promise you, there's just been so many of those moments that if you don't have conviction in the thing that you're doing, like you will quit, like you will cut early. You will never, ever, ever have any chance of like realizing that asymmetry. And so like, but it's the same thing. Just like get conviction and take the bet based on your own thesis and learn something at the end of it, because otherwise it's just like wasting your time. There's no point.
I'm a big believer in no self-doubt. I go into things with full self-conviction in myself and zero doubt. I think doubt is the biggest killer of entrepreneurs, and believing in themselves is really important. Now, I'm a student. I study physics at Cambridge in the UK. Europeans have already historically been very risk averse in the last 20, 30 years. Now, the university scene in the world, I think is globally, or in the West at least, entrepreneurship is being kicked out. It's being kicked out of the door. As you know, university students just want to get to university, get some shitty, stupid internship. There's a lot of crypto students in crypto, which is the only entrepreneurial sort of thing I see at scale at universities, which they try to work on. They try to, learn a lot of new things. I just want to hear you're a dropout, as you mentioned. I'm at university. I don't really study much. I do a lot of things on the side. And I'm a big believer in entrepreneurship. I'm a founder with a previous exit, sold my last company last year. Tell me, how should students approach entrepreneurship? Yeah, it's a risk-averse society, man. Universities are suppressing entrepreneurship left, right, and center.
Yeah, I think the way I've always thought about it is just strictly like if you want something that's not the median outcome, like you need to do something that's not like the median input. It's like plain and simple, right? Like it doesn't matter if you go with the common sense advice in any spectrum, like general inputs will have general outputs basically always. And so like you have to be willing to be like fringe on some spectrum of decision making in order to have any chance of having an asymmetric outcome. Like you just need to. And so like it totally depends on what you care about. If what you care about is like this structured path that you can see, then that's fine. Again, people just need to go into it having actually thought about it and say, what do I want? Do I want this path from now to 60? And like, here it is. I get a house here. I get a, whatever here. I upgrade my car here. And like, that's life. And that's like, fine. I enjoy my job. I do it and that's okay. Or do you want something like a chance for something that is different? I just think that is the biggest thing. Like understand the risk you're underwriting, understand the downside. Like if you blow it up, you're back with your parents or like, hopefully you have somewhere to go or something to do. And then you just like try again or you don't. But like, I think people just get so caught up in the fact that it is a risk and not ever actually internalizing like, I'm going to take a risk for 2 years. And if it goes well, I've shortened my work duration from, 65 to like 35. And if it goes poorly, I like bump it up 2 years, or like my quality of living is like 1% less good on the tail end because I've gotten like a few less raises along the way. Right. And I just don't think people like think through the actual trade-off that they're making and what they're looking for. Yeah.
And they don't understand this shit is not taught in universities, man. Universities don't teach you shit. at all about entrepreneurship. There's no such thing. Within the 20 years of schooling I've had, the word equity was probably not mentioned once. And it's the most important thing. Yeah. Clay, over to you, man. Let's wrap this up.
Yeah, I think we're about to wrap it up. I have one last thing. One of the guys in my groups mentioned to me, he wanted me to ask you, it's Josh Icebags. He wanted me to get you to tell the story of how y'all met. And the other question was, when token? When is Layer Zero coming out with a token? And if you can answer it, if there will be one, what will like the actual utility of it be, you know? But definitely let's get to Icebags here. He said you guys hung out a little bit. And,
this is serious.
Yeah.
Okay. I don't know if I should tell this backstory.
I think he wanted you to.
I think all of I think anybody who knows Bags knows that he's a degenerate. Anybody who knows me knows that I've been in gambling for like a very, very, very long time. I started playing poker when I was 15 and a half. By the time I was 19, I was playing, the highest stakes you could play in the world. I was playing 500, 1K online. We were winning, losing $1 million pots. Like I got pretty decentralized to risk in those sort of things early on and just like general gambling. And so while I don't do much of it anymore, I'm willing to be on the other side of it once in a while. And so Bags, I never met him. I just flown into Dubai for this event that was happening. And there were these guys lining up on the like promenade or a hotel to do a race. And I knew they were all generally from crypto. I had a couple of friends there and Bags asked me like, you want to bet on this race for 5K? And I said, okay, sure. And so we just drafted a couple people and they ran down the race and I won. And Bags owed me 5K. And then there was a couple other bets and he kept making more and more bets and he was getting more and more stuck. And I was just like, this poor guy, like I want to let him a chance to get his money back here. And this culminated in us sitting there and flipping a cigarette pack that had Arabic on one side and English on the other for larger and larger amounts, and until he finally won one and got it back. But it got to like a very, very large amount. There was like a crowd around us, like watching these things happen, and it was truly peak degeneracy. And I think most people there thought we were aliens, and both of us were just like, just kind of doing it. I won't go into like the numbers and everything that happened there, but it was a pretty large amount. He got unstuck. He didn't owe me any money at the end of it, but it was a very interesting way to meet and really endeared me to Bags at the very first moment. So he is very much like me in some ways, and totally, totally different than me in others. And just that he is like very outgoing and a total animal when he parties and goes. He's awesome. He's a great guy.
Yeah.
On the Layer Zero side. Yeah, go ahead.
Oh no, I was just saying. Yeah, I met him in Vegas. Actually, the Pandas, rented out the top of Mandalay Bay, like the foundation room or whatever. And I met him and his lawyer Eric. Quite the characters. And yeah, I still chat with him every now and then. He actually, I did the last podcast with him actually. So he made it a point. Make sure you ask him how we met and get the story. So yeah, last one, and then I guess we'll
probably wanted me to go into a little bit more detail, but I'll keep it opaque. On the Layer Zero side, obviously, we haven't said anything publicly about what it will or won't be, what will or won't happen. I think anybody who's poked around in the contracts has found breadcrumbs, and kind of you see lots of people theorizing around what will or will not be. But for now, we haven't really said anything, so I'll leave it at that. Okay.
Yeah. No worries. I knew there was a small chance, that you probably couldn't say anything, but I had to ask because they were all asking me when token, how can we get this? What's the airdrop? How are we going to get it? So I said, all right, I'll ask, but I don't think he's going to tell us.
Real question is, will Wormhole launch it first or will Layer Zero launch their token first? All right.
Yeah.
Let's wrap this up.
Yeah, let's wrap it up, man. We really, really appreciate your time. Yeah, hopefully all three of us can grab a drink out there in Dubai. So I'll be there from the 1st through the 8th. So yeah, really appreciate your time. Keep your head down, keep building. I think you're really important to the space. You've definitely contributed to a lot of positive things moving forwards. And we definitely appreciate your time. I know how busy you are actually. So
appreciate awesome. Thank you guys so much for having me, and anytime.
Good convo. Let's meet up in Dubai. Habibi, let's go to Dubai.
Sounds great.
Yeah, sounds good. All right, we'll catch up with you guys later. Thanks for tuning in.
See you soon. Bye-bye.
Now, here's a word about our sponsor. Alpha DAO is an exclusive group of some of the top builders and founders in Web3 and all of crypto. The Alpha House is based in New York City, in the heart of Manhattan, and hosts weekly mixers where you can get exclusive access to the best networking in the space. Members also get exclusive access to deal flow, priority access to host events at the Alpha House, and so much more. Memberships are based on an interview process, so if you think you have what it takes, check out www.meetalpha.org and get in contact with us to schedule an interview.